Let's talk about today's trade on how I bought the low of the day over here. Very easy, very predictable, as I mentioned. When we opened for the day, the body was around somewhere here, and I was expecting it to go back into this red area, maybe to this one over here, to this place, depending on how low it can go. I wanted to gauge the reaction from there. On the 1 hour chart, you can see we had this hourly fairly gap noted out like from a few days now. I always send it in the group chat. It's important. Why? Because we show rejection here, we show rejection here, we took support here, so we can see support again on this. It has already been pointed out for a few days, and it was on my chart today. This is the wick of the previous day. Now let's go down to a 1 minute chart on what I posted there. So I said that the equal lows, they look very suspicious to me. Equal highs, sorry, these equal highs over here, they are my target, and I expect the price to go down before that into that area down there before going up. So when I start seeing the price going down before the 9:30 open and 9:30 open goes down, that's manipulation. All this chop and then sudden move down is manipulation. I know that it's going to reject this area. Now, how do I know it's going to reject this area? There are a lot of reasons for that. First reason is that it's an important hourly fairly gap area. Second reason is that we are already 0.5 of the range of the previous regular trading hours and opening gaps. And the most important reason why I thought it would be this area for rejection is because I projected it between 7 a.m. to 9 a.m. and I saw what is it near the 0.5 of the range. It was very close to the 0.5 of the range, and I saw rejection. And when I saw rejection from there, I was waiting for it to reject the 0.5 of the range of this wick over here. I saw it rejected, so I started entering on here. Now I don't expect it to go back, and that's how ICT works. We see rejection on 0.5 of different things like a fair value gap, a weekly opening gap, daily opening gap, regular trading opening gaps, VIX. All of these we want to see rejection. If we are bullish, we want to see rejection on the upper side. If we are bearish, we want to see rejection on the lower side. So let me give you another example. Look at this fair value gap over here. You see how we saw rejection from the midpoint of this place, and we did not close the bodies below it. This is something ICT teaches to this day. Even if you go on his YouTube channel right now, I was actually looking at it. Look at this. And he always mentioned that the bodies should not lay below 0.5 of the range of whichever I'm measuring. For example, this one I'm talking about, the bodies were not below 0.5, so it's perfect rejection. Same here for this area. So this was very clear to me that I will see rejection here, and I targeted this high over here. I was planning to hold a runner over here, but I just ended my trade over here. I already made a lot of money, and on another account, on a funded, I could not make more than 50% of consistency, so I closed that trade as well. I was trading on two different accounts. Let me show you the executions. As you can see here, as this wick was going down, I started adding contracts. I added 3 contracts. Took one partial here, second one again on this area, on this rejection over here. After seeing same idea here, see, I saw rejection from 0.5 of the range, so I was expecting that we will see a deep retracement, which we did. So I exited when we rejected this area. I could have waited and got out over here, but I actually had to go to the gym as well, so I got out. Again, amazing trade. Look at how many points I took from there. Okay, let me see. So from here to here is 171 points. That's $350 $3,500 on one contract. So that's a lot. I'm content with it. Amazing. I'll see you guys tomorrow on how things work, and I'll try to give you more data tomorrow so that you can enter in these kind of trades as well. Buying the low of the day sounds cool, right? Buying the low of the day. All right.